Good afternoon, everyone. Gabe Velazquez here with you on a Friday the 13th. Kind of scary in the beginning, but we got through it. Hey, Kelly, how you doing? So, yeah, welcome everybody. Hope you're having a good week. Been very choppy as we know. So let's start off with I've got a class coming up next Tuesday. If you guys want to sign up for that, it is free. Hit the link below. I'm going to talk about how to distinguish between all the various levels: accumulation, distribution, supply, demand, all that good stuff. Spent about an hour with you guys on that. So if you want to sign up for that, go ahead and hit the link below. I'm getting filled up. I usually get about 50 coming in. So do that. Also sign up for the newsletter. And if you want to spend 5 days with me in our morning session, also welcome for that. TransparentTradingSolutions.com is the website. Okay, everybody. So just kind of we had the CPI, as you guys, I'm sure everybody knows, and I was with you on Wednesday. Hey, Wendy, how you doing? And I mentioned that we anticipated possibly the rally coming in was anticipatory, kind of anticipating a weaker number, and we may sell off. In fact, we did sell off a little bit, right? I mean, we did come down, and even this morning looked like we were going to sell off. But in a nutshell, I think the market still looks resilient. The VIX under I mentioned that the other day too. The VIX under 20 could go into the mid-teens. I am going to start getting a little bit more cautious here. I'm starting to hear talk now. I always find it really fascinating that if you think about how far the market has come, especially the S&P off the lows, like close to 20% off the lows. And now that we're, past the right at the 200-day or trying to breach that, now you're starting to hear talk about. I don't know if you guys have been watching, the fin tweeters and all that kind of stuff. Now everybody's starting to talk about, a new bull market, like right, the genesis of a new bull market and so forth. So I find it really interesting. Now, again, that does not to say we can't go higher, but I would be, I'm actually starting to turn a little bit more cautious with my members in terms of chasing anything right now. So this morning we were, we're in SPY and, we need to get a little bit higher levels for us to make money on that situation. Around 400 in the SPY, I think we'll be okay with that. And just, the lack of movement, as you can see, since yesterday, we've been essentially in about a 50-point range in the S&P, right? We came down, touched 3860 and 3960. 4020 was the high. We just kind of hit that this morning. So seems to me like we're in a process of putting in another range here, grinding it out. I think this is a battleground. I've been writing in my morning overview that this clearly is a battleground between the bulls and the bears, right? So the bears will be, if you're in the bearish camp, you're going to say, every time we've come up to the 200-day moving average, we failed. We still have inflation. The Fed is still on the warpath, blah, 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 blah. That's your bear case. The bulls will tell you, fundamentals are starting to look better, under the surface. Lots of stocks are starting to perk up. And so that is now, I think that's really where we're at right now. We're at that critical juncture. I think it's a battleground. We could just be churning in here for a little bit. What's interesting also over the last couple of days, and I talked to you guys about this on Wednesday, is NASDAQ really starting to outperform. We also did short the Russell, incidentally. We shorted the Russell 1892.10, just so you guys know where we're at. You know, we're always like to be transparent here. And if you look at the Russell, you know, interesting in the Russell, let's talk about that. A big range in the Russell, and and it is a little bit of aggressive. We got a really tiny position in that actually. But if you look at the chart of the Russell, if you pull up the chart of the Russell, what you will see is that every time in the last, since November, we hit 1900 in the Russell, we've actually had a really sharp pullback, right? And so it's almost like a range trade, and I did it almost like a hedge against, because we're net long on with JPM calls and SPY calls. So obviously we would benefit more from a market going higher. Our members would. And JPM had a huge reversal from this morning, as you saw. So it came in lower, traded all the way down to like 135, ended up today like 142 and change, I believe, right? So had a huge reversal, and that part is why I think the S&P also reversed and so forth. But there's still, it's still a little bit sketchy. So hopefully we can make some money on that. If not, by the way, if we do get a huge rally next week, we will, since it's such a tiny position for the Russell, we will more than make up for that with our JPM calls and our SPY calls. Okay. So all in all, next levels to look at on the S&P. I've got some levels around 40, 50, not great levels, I have to tell you. If we get a rally, I do believe we may actually end up around 4,200, I'm sorry, in the S&P, which by the way, that's the December failed rally that we had after the CPI, November CPI. And I always talk about, like, for some reason, traders have a very short-term memory. We were at 4,200 in the S&P, or actually not 4,200, but what was the high? It was, I think, 40. Let's see, looking at my chart here, it was 4180, not a mere 4 weeks ago, right? And here we are sitting at 4015. So is there a chance we could rally and test that high? Absolutely. Now, if that happens in the next couple of, next week, we'll do really great with our SPY calls as well. So in any event, but we still have 40, 50 to get through. There's like moving average and so forth. So all in all, I think, if you really look at your charts, we were in a big range from November, December. We looked like we broke out, we pulled back. And now it seems to me like we're setting up a new range between 40, more or less on the S&P between, let's call it 40, like yesterday's low. Let's call it 40. Yeah, let's call it 39.50 to 40.20, roughly, right? That's kind of what's setting up right now. We've got the stock market closed on Monday, MLK, but we will have a futures market, by the way, because MLK is just a U.S. holiday. So we are going to have a futures market. Okay. So we'll see what happens. Now, typically, because we don't have the S&P cash to peg against the S&P futures, i.e., we don't have any stocks open in the New York Stock Exchange. We usually get a very quiet, very narrow trading range, but you never know these days, right? Anything comes out geopolitical or whatever, that could actually create some volatility. So that's really where we're at. NASDAQ, similarly, NASDAQ outperforming a little bit. And on the NASDAQ, overall, there's a really great level I'm looking at right around the 11,700 level. You'll see that on your charts if you pull up your longer term charts. That would be there's a couple of levels up top here, 11,900, 11,700. If you look at your charts, you'll see what I'm talking about. Okay. So those are coming up in, probably next week. Still the NASDAQ overall still lagging, but those will be really interesting levels for us to look at with our members. Okay. And then I just spoke about the Russell. That's very clear range. One of the things that's interesting, let's move over to the bond market, is the 10-year. The 10-year is about ready to break out 115.11. Check it out. Now, why is that important? Because I actually spoke to this point to my members this morning. Is it's almost like if you look at the recent rally, especially, I mentioned this to you guys last week when we had the weaker PMI numbers and the 2-year just took off. And now you can see that the bond rally continues up until this point. We're also at a very critical juncture in the bond market. And it's almost like the bond market is thumbing its nose at the Fed, to put it a nice way, right? Because, and so my point is that the bond market is not believing the Fed. So why would rates come down, bond market rally as hard as it has on the short end of the yield curve amid the continuous hawkish rhetoric, right? Every day, you hear another Fed governor, no, we're not going to stop it, blah blah blah. Terminal rate's going to be 5.5, so on and so forth. So it's really interesting. But here's my point. I'm going to sum this up very quickly. Look at the chart of the 10-year. That's really the benchmark interest rate market you have to look at. If you take a look at the 10-year chart, you will note that we had clearly we rallied hard from October, right? We had that October low 109.10. We rallied. We're hovering around 115, and then then more inflation news came out. We pulled back hard down to 112, and we are sitting right along that 115.11 mark again, and we pulled back today. My point to really sum this up real quick is from a technical basis. Take a look at the chart. We made a low in October, 109. We pulled back, made a higher low, 109.12, took off, took out that pivot high you see there in October of 113. We're hovering around 115, and now we're back up again. We pulled back again. What am I getting at? If we take out 115.11, that would create another higher level. And that will also, if you translate that into interest rates, that will actually break to a new low in interest rates. You get the idea, everybody? Does that make sense, everybody? Just kind of following along with me on your charts. And that's why the 115.11 is going to be so critical. And if we know that interest rates are driving this market, so part of the reason why we've had such a nice rally in stocks is, again, goes back to the bond market. And so if my premise is correct and we are peaking again in the stock market because the VIX and now everybody's starting to get bullish, whatever, that is going to be a key piece there where now bonds retreat again, and that's going to probably stall out the stock market. Okay, so that's really where we're at on the bond. And in fact, we want to get long our group TTS. We're actually hoping for a little bit higher rally in the TLT because we're going to try to get short the TLT. We were trying to get long below 100, and as you saw, we had a big drop in the TLT. If you look at your charts of the TLT, and we just never got there. So okay. So those are the key points. Also the dollar. So this is really key. I want to emphasize the dollar. The dollar is sitting now, had another big drop. 10, check out your charts, 102.19, 101.65. daily accumulation. Two setups I'm looking at with TTS, my members. Look at gold. Gold took off. I know, I've been in here telling you I've been super bullish on gold. Unfortunately, we just never got a pullback to get us filled. We actually were trying to get long, and now the thing just takes off. But here's the thing: now that gold is gone from, it actually broke out. Remember, I was talking about 1880. It broke out from there. Now we're actually coming up to some really good shorting areas in gold on the bigger charts, right? So I am now, clearly I want to buy a pullback, but this thing is just not pulling back. This thing is getting very, very stretched, gold. And now again, like always happens, gold has gone from 1622 when nobody wanted to buy gold, right? Who the heck was going to buy gold at 1622 when it was in a downtrend and all that stuff, right? And now that it's rallied almost 1622, 1922, now everybody's starting to get bullish on gold. Go figure it again, right? And so again, not to say that it can't get to 2000 at some point, but now it's actually setting up for some really, especially if the dollar rallies away from that accumulation level. So check out your charts. There are actually two levels I'm looking at, roughly around the 1930 area and 1951. I prefer the 1950 area. Quality and all that kind of stuff, location much better, but we could actually get a nice pullback around that 1930 to 40 level. Check it out. You'll see it on your charts. Okay. Also, in regards to the dollar, the yen, right? And again, you guys I've been in here talking about the yen forever, right? If you take a look at the yen, similarly, it's almost like a mirror image of gold. Interestingly, right? There are some really great looking levels on the yen to short against also, namely, I would say around the 80 to 81 level. I am looking at, we're probably going to take a short similar to gold in that, in the yen. So check those charts out for yourself. Okay. Those are going to be really some really nice trades if they work out. Again, we don't know for sure anything works out, but it is worth checking out. Okay, so those are the only two markets I'm actually looking at in the currencies. Everything else is kind of just, you can go through the euro, the Kiwi, pound, Swissy. You can see it's all chopped and really just kind of been grinding higher. So as you and also the Mexican peso. So I've been talking about the yen, the Mexican peso. Look at the move on that thing. Again, did not get any pullbacks, but we are approaching some really key levels on the Mexican peso around the 53 area on the weekly charts. So if you wanted to take some notes here today, look at yen, gold, and peso. Those are the three related markets. And the reason you want to be shorting those, or at least looking at shorting those, is those are inversely correlated to US dollar index, DXY, the Dixie. And so if it's kind of that confluence of, dollar hitting a very big accumulation coinciding with these three big moving markets, simultaneously hitting their supply areas. Make sense, everybody? Okay, so that's that. I've been also talking about copper, and copper also has a level much higher. I think copper still goes. And one of the challenges again when you're trying to buy pullbacks is sometimes for the style of trading that we do. So I'm incorporating a lot more breakout style trading because if you're waiting for pullbacks in this case, and every one of those cases I just mentioned, we never got a pullback, right? Not a and even copper broke out hard around 4, and it's just kind of running. So a lot of these things are running right now, but there is a nice little shorting area in copper also, a little bit higher than where it is right now, around the 440, 450 area in the copper charts. Okay, so those markets, in fact, those are the markets I've been talking to you guys about, right? Ad nauseum. So hopefully something gives on those. And now that we've missed some of these breakout moves to the upside, now you got to take advantage of the shorts when they come in. Okay. Lastly, energy, oil also rallied again. Kind of quietly, nobody really talking about oil. Again, we were trying to get long at 78, trying to get long at 77, just kind of chopped around and just been grinding higher. So it's been a bit of a challenge trying to get on board these things. But it is what it is. Now we're going to get up to the 82 again. And then also one market I've been talking to you guys about, this nat gas at 350. We're also trying to get long oil on that. It looks like it may go all the way down to $3.20, $3. This weekend's going to be really interesting. I've been kind of really just been very patient with that. But I think that is almost ready for a pop to the upside. The only issue again is I don't actually have a level unless we get down into the $3. That's why I've been kind of holding off on the oil. But the oil at $10 a share is going to be a monster trade because that thing is going to go, by the way. Again, a move in that gas from 3 to just like 5 will take oil from it's probably going to go from like it's closed today around what let's see, right around 1074. That thing's going to go like to 30. Right? That's why now the other question is, why don't you buy futures? Can you buy futures? Well, every level on that thing's swinging 5K a day, right? If you guys have attempted to trade on the futures side of that. And so there's other ways that we can play some of these really volatile commodities. Even the quarter size, which I typically trade, is still swinging. Every level you're looking at that thing is $400, $500, $600 wide, right? So that's why either UNG or oil. Now, again, the question is why not UNG? I've been talking about that. Well, yeah, it's fine, but see, here's the difference, because this is such extreme levels in nat gas. If you buy oil, if you buy UNG, that's also coming down into the, that's at 11. Oil is at 1084. The same move from let's say 3 to 5, just again hypothetically, in that gas will take probably UNG will take it up to like 13. Oil will go to 30. Why? Because it's leverage, double leverage. So you get the idea. Obviously, there's also the commensurate risk inherent with that. So you got to be careful. So I am planning a trade with my members with that. By the way, if you want to join me for 5 days, you actually will get to see, if I do it live, you'll actually see me recommending it, the specific price or whatever. So if you want to join me for 5 days, go ahead and sign up. It's free. You'll get 5 days of the morning session or morning market methodology. Starts at 5:30 in the morning Pacific, and we go for about an hour, and then I start talking about options when the market opens and so forth. Okay. So other than that, grains, we actually were trying to get short. We had a grain report yesterday. We were trying to get short soybeans, but then I because it was too close in the report. So I, in fact, canceled that, and it was a good thing because it would have stopped out. So sometimes, one of the services I provide is sending out, text messages when situations change. So that actually saved us a stop out, and it's still kind of just range trading. So I'll cover that on Tuesday as well. Let's see what happens with the grain markets. It looks like they're starting to get a little bit bullish as well. So, okay. So that's gonna do it. I'll be back with you guys on Tuesday. I've got all my technical issues sorted out. I'm also by the way, look out for the Twitter audio thing that they put out. I can't even remember what it's called right now. Shoot, you know what I'm talking about, right? Right, everybody. Twitter Spaces, I think it's called. I'm going to start doing one of those as well, a mid week. So I'll do here Tuesday and Friday, and then I'll do probably one of those like on Wednesday or Thursday on the Twitter to get a much broader audience and a different audience. So I'll start doing that probably next week. Other than that, have a great weekend, everybody. Again, stocks are closed on Monday. We will have a futures market, and I will see you guys on Tuesday. Have a great weekend. Enjoy your day off. Take care. All right. Take care, everybody. Have a great weekend.